Hello everyone. Hey, in today's YouTube video, I want to talk a little bit about the flats. It's been a while since I've done an educational video on what flats are and kind of how they look. So maybe this one will, give you a pretty, quick and comprehensive look in what flats are and kind of how they look. But the bigger question is, should you trade flats or you shouldn't, or where you should trade them and how you should look at them when you spot them on the chart. So as you know, flats are part of the corrective structures in the Elliott Wave principle. We have flats, we have zigzags, and then we have triangles. So these are kind of the main core corrective patterns. Everything else, it's a combination of these three formations. So when we look at flats, there are several kinds, and they're ugly little beasts because they're very tricky, and they're kind of painful when they unfold, especially the expanded flat variation. It's quite nasty when it happens. And actually we had one in the S&P 500 right before COVID hit, and we were and created that big C leg to the downside. So let's just kind of go ahead and review these and see how we can identify them, and if you trade them, how you should trade them. So take a look at this, right? So back in here, I'm gonna write. This is the first flat, and this is gonna be. I'm gonna do a bullish scenarios up at the top here, and I'm gonna do some bearish scenarios up at the bottom. So if you're bullish, or if you notice that the market it's bullish and it's moving up, right? So you have a nice impulsive move going to the upside like that. Well, what's gonna happen when you get a flat scenario, and this is you kind of have to identify this as the moves develop, you're going to get a nice impulse. Let's say that this is a wave, say this is a wave one of the lows, right? And it's a nice 5-wave impulsive move. There's a 5 waves inside here, and that's a wave one. And now what's going to happen to get a flat, and I'm going to go for this one, we're going to call it like a regular flat. So let's go here. We're going to say this is a regular flat. So what you're going to get is you're going to get a 3-wave decline in wave A. So you're going to get something like this. You're going to get A, B, and then you're going to get a C in here. And this is going to be wave A of the flat. Then what's going to happen next, you're going to get a 3-wave advance, and it's going to go like this. It's going to go A, down in B, and then you go up in C. And this is going to be wave B of that flat. And what's going to happen next, then, to get a regular flat, you're going to get a 5-wave decline. 1, 2, 3, 4, and 5. This is going to be wave C. And then this completes wave 2. And then from here, you're going to go up into the next impulse. So this is going to be, either wave 3 or it's going to be wave C. It's going to be a nice impulsive move to the downside. So this is kind of how you identify a regular flat. So what happens in a regular flat, it is that this wave B, this one needs to retrace at least 89, 90% this whole move that you have in this wave A to the downside. If it doesn't retrace that much, it's very unlikely that it's going to be a flat. So you wanted to see this correction move being in 3 waves. And it has to be up into about 90% of this A-wave decline. And then you're going to expect a 5-wave decline here in this wave C. And what this does is creates a regular flat. Usually in the wave C, doesn't come below where this wave A kind of starts. Sometimes, in some not ideal situations, let's say this wave C, it's going to just delete this out of the way. So this wave C, it's going to come down like this. So you're going to have a 1, 2, 3, 4, and 5, right there. Excuse the last kind of wave that I have on there. And sometimes this will come below this wave A, but it's still going to be a regular flat. And then from here, you're going to go to the upside like that. So this is what I have for you in terms of a regular flat. So now, if the market is bearish, it's going to be something like this. You're going to have a wave 1 decline to the downside, and then you're going to go up in 3 waves. It's going to be A, B, C, and this is going to be your wave A. Then you're going to come down, and you're going to have this wave B in here, right? And then let me just make it a little bit better like that. And then you're going to go 1, 2, 3, 4, and 5, and this is going to be your wave C, and then you're going to decline lower. So this is the bearish kind of flat, right? After you get an impulsive decline, you get a corrective move, 335, and this is going to be, you know, the next decline. So what you have to know is that flats here, right, they are 3, 5 structures, which means that the first initial leg, it's in 3 waves, the second leg is in 3 waves, but the last leg, that C leg, it's a nice motive wave in 5 waves. And this is kind of how it looks, right? This wave C can get a little bit back above there, you know, it's fine, but this wave B needs to come at least, you know, 88-90% of this A wave move in there, right? So this is what we call a regular flat. Now the next flat that you have over, it's something that we call a running flat. Sorry about that. All right, so then what's going to happen is you're going to have this nice impulse, similar story like you've had it before, but what's going to happen now is instead of you know, you're going to get the same kind of 3-wave setback that's going to happen first in this wave A, right? So let's say this is wave 1, and then the next one, it's going to go up here, but it's going to go back above the A wave origin. So it's going to go back all the way up there. So this is going to be your B wave, but it's still going to be in 3 waves, but it's going to run away. It's going to run away from this A wave. We'll call it that a running flat. A, B, and up in C. And then the next decline, it's going to be in 5 waves. 1, 2, 3, 4, and 5. And this is going to be your C wave. But what happens is the C wave does not come below where this A wave ends. So you're going to get an A, you're going to go up in B, and then kind of down in C. And then from there, you're going to rally up, and you're going to start again. So this is what we call a running flat. Now this B wave travels usually, you know, 127, 120, 138 multiple of this A wave to the upside. In rare occasions, you will see this B wave go 161.8, but that's kind of an extreme, you know, B wave for a flat. So you wanted to kind of, you know, get above there, 127, 138 of this A wave to the upside, and then the C wave will usually get equality with this A wave, with this wave A. So you will get 100% C versus A. It's a similar story back in here where you get the C wave, usually it's about 100% of wave A. You can get some multiples of that, it's fine, but in a running flat, you're not going to get the C wave coming below the origin of the wave A. So now you're going and you're thinking, okay, well, let's see what happens on the bear scenario. So you're going to get the decline back in here, and now you're going to get A, B, C, and now you're going to get another A, B, C to new lows, and then you're going to go 1, 2, 3, 4, and 5, and then the C wave remains below this A wave, you know. So this is going to be A, that's B, and then down in C, and after that you sell off to the downside. So this is kind of how you identify, you know, if it's a running flat or if it's you know, a regular one. If it's a running flat, then wave B makes a new low, kind of fools everybody. Hey, you know, we're ready to sell off. It does so in 3 waves, and then usually comes, let's say, 127, 138% multiple of this A wave. And then and then you know, the market rallies quickly in the C wave. It stops short of this A wave and then sells off to the downside. So this is what we call a running flat. And then the next one that I have here, it's what we call an expanded flat, like that. So we have a similar scenario here where we're rallying, right, again into this wave 1. And now what's happening in here, we have a 3-wave decline in wave A, then you have a 3-wave rally to new highs in wave B, and then you have a 5-wave decline, a very sharp decline, 1, 2, 3, 4, and 5 in this wave C, and then you rally to the upside. So as you can see what happens here, the markets fools everybody in both directions. This goes up in B at the same rate at about 138, 127% of A, and then wave C in here, this becomes a little bit larger than this wave A. You're not going to get that equality. This can, you know, travel 161% of this wave A, 161.8. some multiple of this A wave to the downside. Now, these levels are not precise all the times. You're not going to get, so don't expect from the market to be, super exact on these fib levels. It's something to keep in mind as potential targets, but don't be caught up in those fibs too much, because you're just going to grow frustrated if those levels are necessarily not going to get hit, or if it stops short, or if it gets just slightly longer than what's usually allowed in for a flat. So this is the ugliest of them all, because it goes up, it comes down, and then it resumes in the direction of the original trend. These flats, these corrections are, they happen against the one larger degree of trend in here, right? So if this is a wave 1, this is going to be, let's say, a wave 2, or it's going to be a B, but it's going to be in the direction, it's going to resume in the direction of the primary trend. So then when you sell off, it's a similar story. You come here as a big sell-off, and then you have your A, B, C, then you have A, B, C to the downside. You make a new low in here, and then you go 1, 2, 3, 4, and 5, and that's your C. This is your B wave, and then this is your A wave in there, like that. And this is wave 1, let's say, and this is wave 2, and then you're resuming lower. Sorry, it's not going to happen like that, but you know what I mean. So this is these are the flats. Now they're very, very ugly. It's very hard to trade them, and you see many traders trying to call for flats the moment you have a setup that kind of looks like this, and you have a 3, and then you move up in 3 in here, and you're ready to call for a flat. And I would advise against that, because what happens, you can get a lot of different patterns out of here. You can get maybe a running triangle, right? And this becomes an A, B, C, D, and E, and then you move higher, and you're never going to get that flat, and you're going to get frustrated. So don't rush to call a flat. Let flats. Also, if you're going to get a 3-wave decline in A, and you say, oh my goodness, we're getting a flat, or you're starting to draw all kind of scenarios that you're going to get a flat, or who knows, or a zigzag, be patient and let this market kind of, develop. So if you want to wait for a flat, you just have to be patient, to wait for it to kind of finish off. And during the market, time, and during when the market is open and it's trading, it's very hard. So unless you come on the computer, you open your computer and you see something that looks like this, or within, let's say, a few days of this finishing off, only then you can kind of start to say, I think I'm seeing a flat in here and it's about to be completed. Let me put a position on the long side, because I recognize a flat. So don't try to anticipate flats. Try to recognize them after they finish, or when they're very, very close to being finished. Okay? The most frustrating part, and a lot of new traders do this, is they see a 3-3, and then they're automatically thinking it's going to be a flat, and they want to short and catch up, catch on the C wave decline, and then the market morphs and becomes something else. Wait for this whole structure to be complete. Wait for you to see a clean or sort of as much of a clean pattern as you can, and then start to initiate a trade. So the way you do that is you see a 5-wave decline, you see that this is being over, then you wait for a little bit of confirmation to the upside, at least one of these levels to be taken out. You buy the pullback in here, and then you look for the move to continue to the upside. Now this could become something else. Who knows? Maybe the market doesn't respond. Maybe this pattern is not correct, or the market has other thoughts, and you continue to sell off, right? And you continue to go to the downside in whatever else happens. But you got to have your stops below these levels, because that's where your wave 1 kind of starts off the lows, and you get out of the market and you reassess, and you study the pattern again, and maybe this 5th wave is not done. Maybe this is still a 4th wave information as you move lower, and maybe only after that, maybe this becomes, instead of a running flat, becomes an expanded flat, right? So you gotta be patient with this and let it develop. So in terms of trading it, I would not touch these formations as they're forming. you don't know what's going to happen. You know, let's say that the market does this for you, or this is a zigzag, right? It's the beginning of a correction, or maybe this is, you know, a wave 2 and then you're pushing higher. I don't want to get into the details of trading zigzags or double zigzag complex corrections because, you know, in today's episode we just talk about flats. But don't rush to call flats. Let them develop, and then look at the charts and recognize them. Also, go back in time in a lot of charts, you know, and study markets. You know, from commodities to you know, the equity market, stocks, forex, cryptos, and try to identify flats. Just look back in time and go and see where they are and kind of how they behave, and see where you can find a regular flat, where you can find a running flat, where you can find an expanded flat, and try to create a library for yourself of you know, just save them on your computer so you can have access, so you can remind yourself all the time how, you know, how these patterns look. And then you'll be able to spot them much easier as they develop. And next time when you see a 3-3, know that this could become a running triangle, right? Or this could extend in a 1-2, 1-2, and then you're pushing, you know, much higher into an extended move, or you're going into an impulse. So be patient, wait for these patterns to complete, because they're going to be obvious, and you know, you'll see them when they do. So guys, listen, thanks for watching, and you know, I'll leave it at that. I really appreciate you being here. Please don't forget to sign you know, to sign up for this channel and subscribe, and you know, leave a like, and you know, leave any comments you have, or if you struggle with anything in the flat world, let me know and I'll be happy to help you out. Visit us on Telegram as well, and I'll be happy to answer any questions. There's a bunch of links below this video, and you'll be able to kind of get in touch with me up there. So thanks for watching, and have a great day. Bye-bye.